Good afternoon, and welcome to Cracking the Code on Cross-Sell. Today we will learn why banks miss out on cross-selling opportunities. No personalization, department silos, and disparate systems are often the culprits behind customers' wandering wallets. We will learn the importance of cross-selling and how to seize opportunities by leaning into data analysis, communication, education, and engaging experiences. With these strategies, you will attract new prospects and retain your current consumer base. We thank you for joining us. I'm Naomi Snyder, Editor-in-Chief at Bank Director, and we thank you for joining us today. This webinar is brought to you by both Bank Director and Total Expert. Total Expert is the leading fintech software company that delivers purpose-built customer relationship management and customer engagement for modern banks. Total Expert unifies data, marketing, sales, and compliance solutions to provide a cohesive experience across the customer lifecycle. Total Expert turns customer insights into actions to increase loyalty and drive growth. Before we get started, let me share just a few things to keep in mind. First off, don't worry, we can't hear you. You have joined this webinar in listen-only mode. We recommend that you click on the slide bar at the bottom of the screen to adjust between the presenter and the presentation. If you have questions for our speaker, please note them by clicking the Q&A button found on the right side of your screen. You can do this at any time during the presentation. Once our presenter has finished with his talking points, we'll have a Q&A period where those questions will be addressed. There is no need to take detailed notes, as the presentation will be shared with all attendees within 24 hours via email. It will also be available on bankdirector.com. If you have any technical issues, you may also note those using the moderator chat feature on the right-hand side of your screen, and we'll do our best to take care of it. Regarding our polls, those will also appear in the sidebar near the Q&A button. When you've selected your answer, just hit the Vote button to submit your response. Finally, the opinions expressed in this webinar are those of the individual speaker only, and they don't necessarily reflect the opinions of other speakers or other entities. On that note, let me share a little bit about our speaker today. JJ Sly is a principal product marketer for banking at Total Expert. He brings over 20 years of financial marketing experience, including 10 years at a $2 billion bank near Minneapolis, where he served as the Vice President of Marketing and Creative. In addition to developing the vision and strategy for the marketing team to drive account acquisition and cross-sell opportunities, he was closely involved with the implementation of marketing technology solutions, including CRM, marketing automation, mobile banking apps, and SMS platforms. So JJ, please take it away.
All right, thank you, Naomi, appreciate it. Let me just share my screen here. There we go. So thank you again. Good afternoon, everyone. As Naomi just said, my name is JJ Sly, Principal Product Marketer for Banking at Total Expert. So what does that mean? It means my job is to listen to you, your needs, and your goals. Take what I've learned in my time in the field and collectively what we've learned at Total Expert by working with financial institutions across the country to help you achieve those goals by enhancing your overall customer experience utilizing technology. So interestingly enough, when I started my career, I was at a marketing agency that focused on community banks. One of the things we did for our clients was site studies. So how a branch was performing based on its location, where a new branch should go. One of the biggest things that an institution could do at that time was to be on the right side of the road. So commuters coming home from work just needed to make a right turn into the branch. And that was one of the biggest plays they could do to earn and retain customers. Location, location, location. So now we all know convenient location is still important, but if you look at the overall expectations of customers and how they've evolved, you know that it takes a lot more than just that today. So that means in addition to capturing business from your community, you also need to do your best to maximize those opportunities with your current customer base. That equates to effective cross-selling. or increasing wallet share, or deepening, expanding relationships, however you want to say it. It's really about effective cross-selling. And it can be effective as long as it's about identifying your customers' needs and helping them find that single place to get their financial needs met. So at Total Expert, we are big fans of proactively educating, engaging, and advising customers, especially when you put that customer in the forefront of your process. And our platform is built to help you do just that. So, and you'll see, for institutions that do these things, trust does grow. And with trust, then comes loyalty, and then comes those customers for life. And you can see with the stat on the screen, 82% of consumers say they place more trust in institutions that continue to educate. So with that, I would just like to get a handle on where we're all at. So we're going to have a quick poll here, if you don't mind. Ask those of you on the call to let us know what you think of your current cross-sell process. And we're just keeping it fun here, so let's indicate whether it's good, bad, or ugly. No judgments from this group at all. So if you wouldn't mind just taking a shot at that poll, we'd appreciate it. I'm going to pull it up over here on my other screen, if I can see. We've done this poll a few times now, just to ask attendees how they feel our cross-sell process is. Turns out about half the participants, usually about 53%, say that their cross-sell process is bad, and 20% say it's ugly. So there's 30% out there that feel like they're doing an okay job, but most feel like it's not quite where they want it to be. So interestingly enough, we're having a race here between good and bad. And it looks like we're kind of falling in line with the people that saying it bad, but we're having a few more people saying good this time around. So looks like there we got 50% in the bad column. Okay, well, perfect. Okay, I think that's good. Thank you so much. I really appreciate you throwing those comments in there. Thank you. So today, one of the cross-sell use cases we're seeing a lot of banks trying to focus on is capturing more business from consumers after they've closed a mortgage. Interestingly enough, just today, we talked to one of our large bank clients that is starting an automated journey to do just that. Single service mortgage customers coming in with no other accounts, and they're starting an automated journey to try to capture additional business from them. So it's a very important aspect of cross-selling that we've seen a lot of banks interested in. And with that, when we've asked consumers why they continued working with or how they were effectively cross-sold to, we found that the reasons weren't very surprising at all, and you can see on the screen. And they definitely validated what we believe is the path to effective cross-selling. No shock that people liked when it was easy to work with the business, and explains why they continue to do so. Things like staying in touch, being relevant in their conversations. And I'm sure if you just look at these reasons on the screen, you can probably apply them to your own experiences on why you continued working with them. So what are some of the reasons a customer doesn't expand the relationship? This data here that we're seeing on the screen now was put together by our friends at Cornerstone Advisors. And you can see that in most cases, the consumer was never even asked, or they just weren't engaged with relevant products. So again, compare this to the previous slide. And you can easily frame up in your head how important these come into play when you're trying to cross-sell to these customers. So a few other stats I'm going to share that aren't on the screen here that Cornerstone Advisors had. They reported that more financially literate consumers engage with their finances more often. So like we were saying earlier around the idea of continuing to educate your customers will increase their trust with you and their overall engagement. This kind of validates that. And this report also showed that 2/3 of very financial literate respondents assess their financial performance on a weekly basis. Exactly the opposite, only 1/3 of somewhat financially literate respondents do so. Again, the more educated they are on what their options are and how their finances are working for them, the more engaged they are. And then on a weekly basis, only about 18% of somewhat financially literate consumers are evaluating what additional products they need, compared to 45% of financially literate. The more you educate them, the more they're engaged in their finances, the more opportunities for cross-sell present themselves. And again, half the consumers said that they don't do more with a financial institution because they were just never asked, or they aren't asked in relevant ways that were educating them on how product choice matters for their unique situation. So these numbers, this data simply reinforces our belief that educating, engaging, and advising your customers is going to be a component that helps you deepen those relationships. So it's not like banks aren't doing these things at all. But as we've been working with FIs around the country, what we've been seeing is that throughout the customer journey, there are opportunities that are lost due to gaps where the customer isn't being effectively engaged with. If you look at this image, you know it can be hard to maintain this solid line for a customer journey if you're not leveraging additional tools, technology to help you fill those gaps. And that gap on the right is where we're going to focus today, because that's where customers that can be cross-sold to are falling through the cracks. And when they fall through the cracks, what happens? So if you're on this call, it means you have an interest in doing more with your cross-sell efforts, or maybe you've never even got them started. But you're also keenly aware that your customers are most likely not taking care of all their financial services with you. And that's where they go when they slip through those cracks that we just mentioned. When they don't see you as the one source to meet all their financial needs. Now on this report on the screen right now, you can see that while half of the respondents may be using just one single financial institution, the other half have relationships with at least two, and probably more than they actually realize. And the threats to take this business from you are more prevalent than ever. When you look at things like Square, PayPal, Venmo, and some of your deposits are going into cryptocurrency. So estimated that 27 million people, 8.3% of Americans, currently own some sort of cryptocurrency. And then a stat that I saw 2 weeks ago from Experian, 80% of US shoppers are using some sort of buy now, pay later to avoid credit card debt. So even if new customer acquisition is part of your strategy, retention and expansion of relationships should be critical parts of your ongoing strategy, and that equates to effective cross-selling. So after all that, let's get started and go through the steps that we've identified, the code-breaking solutions it takes to help your cross-sell strategy succeed. This will include utilizing technology and data to empower your employees, meet customer expectations, and drive value. So cracking this code is going to break down into three main parts. And the first key is data. When I say data, that is about data consolidation. We still talk to banks every day that have siloed data structures, separate systems that are keeping them from seeing a full picture of their client base. That one source where they can see a customer's complete relationship, and this is really limiting their ability to easily uncover cross-sell opportunities. One of the biggest gaps I'll point out as an example, because we had it at my institution and we still hear it from others, and I mentioned it earlier, is that relationship between the retail or consumer team and then the mortgage team. Usually because these usually sit in different databases. You have a core or even a CRM on the bank side, then that mortgage arm data may be sitting in its own CRM or an LOS, loan operating system, or processing system, and they don't necessarily talk to each other. Now, in some cases, some of your mortgage bankers or loan officers may have developed a good referral process internally between each other as opportunities come up. But what about all the rest of those opportunities they don't even see? Have you even heard of some mortgage penetration in some of our client databases that we're talking to as low as 2%? And between you and I, we both know that there's no way that only 2% of your customers are buying homes or refinancing. Now, with rates as they are, maybe not refinancing as heavily as they have been in the last few years, but definitely still buying homes. Now, you can throw all this data into a data warehouse or standalone CRM, and that's a good start, but then what? If leveraging that data and taking action for your cross-sell efforts is part of your end goal, you're not necessarily going to solve it by simply just mashing all that data together. So that brings us to the next key in cracking the code, and it's about insights. And this is where you're going to take all that data and start learning more about your customers so you can align it with your goals. Now, as part of the insight key, you'll start to segment your customers. Who's actually in your database? When you start to analyze and segment your customer base, you actually may discover you're serving a specific geographic area or a group of people that you didn't even realize, and you can maybe expand on. Then you can start to consider what you have that they actually need. There are some simple things that you can look at when you have all this data together. Simple as maybe customers who have high balances in their accounts that could trigger a cross-sell for a high-interest money market account. or even a referral to a different business line, like if you have an investment team. Maybe you can look at people who recently took out a mortgage that could be a candidate for a new credit card or car loan. And in that case, when I talk about that mortgage situation, again, we find that that mortgage data pairs really well with consumer data because consumers often have financial activity that's tied to obtaining a mortgage. For example, recent home buyers are 2.5 times more likely to make larger purchases. You just bought a house, so you probably need furniture. Either it's because your house is bigger or the furniture you have doesn't go with the rest of the house. That sofa you had from college it's time for it to go. But you can see that that creates a prime opportunity for your teams to engage with that customer about something as simple as a credit card. We've also seen that consumers who buy a home typically will buy a car within 6 months. It could be because they're part of a growing family and that's why they upgraded their home, or they moved into a more affluent community and the neighbors have nicer cars than them. Or they were just simply waiting on a new car purchase because they've been saving for that down payment on a home. So I'm going to keep beating this mortgage track just for a little bit longer here. Another segment could be any past customers that close a mortgage, but also currently have low cash reserves in their deposit accounts. That may indicate that they might not be ready for a surprise expense like a furnace or a conditioner. But they could weather that storm if they've been educated by you and qualify for a HELOC versus a higher rate credit card. You're also able to look at your less engaged segments. Who's not logging into online banking on a regular basis, or maybe more important, who's not using their debit card and can be re-engaged with. Once this data is all together, you can identify those groups all day long and start reaching out to them, right? Well, maybe, but how? We're still not completely there yet. But before we solve for that, I'm going to share just some additional data that you can use that helps you crack this code and drive your strategy even further. So there's a couple types of data that can help. So there's static or semi-static data. So this is data that doesn't change or doesn't change often, but it can really help you understand your customers better. Now you can purchase this additional data about your customers and append it to your system, maybe if you have a CRM. Or import in the Total Expert if you have our platform. But this is types of demographic data or things like soft credit scores or model income data. There's a company called Claritas, and they offer cycle data that can help you categorize your customer into defined segments. It's some really neat categorization they have, like young entrepreneur or seasoned spender, kind of these unique names, but it really helps you kind of categorize them into segments that you can better understand. Because you can understand things like purchase behavior then. At the bank I was part of, through our segmentation work, using our own data and purchase data, we identified that one of our branches had a higher number of Hispanic customers. Now, one of the simplest reasons this was happening was that there were 2 bilingual bankers at that branch. But as we continued to look at our data, we discovered that there was a large percentage of Spanish-speaking people in that market than in other markets that we served. And we realized that one of the best ways we could serve that community was to start translating some of our materials into Spanish, promoting those 2 bankers, and offering accounts that could be opened with non-traditional forms of ID. So that helped us fill some gaps in our acquisition strategy, but we were also building trust with them, and that trust would help as we uncovered opportunities to help them with additional products. Some of the other things we did some very basic data appends simply to identify home ownership. And that helped us for mortgage prospecting and identifying HELOC opportunities. We also appended household data with the number of children in the household and their ages. It helped us better identify specific segments for kids savings, teen checking, or student checking. Also when mom and dad were going to be empty nesters potentially. So things that we could help craft messaging to them specific to their life stage. That was really relevant to them. So that stuff I just covered was about appending data that you buy from somewhere or get from somewhere else, which can be very effective. It was effective for us. But at Total Expert, we also offer a more proactive customer intelligence solution that can take your past mortgage clients and alert you when it's been calculated that they've reached the criteria, can't talk all of a sudden, criteria for a home equity product, cash out refinance. Or if rates reach a point where refinancing would be of value to them. Again, maybe in the market as the rates are rising, it's not as effective, but The idea is these alerts aren't just simply based solely on the original mortgage data in your system. It's actually taking current market value of the customer's home and applying that information in the calculation, better understanding who really is eligible for a home equity line of credit. So that's not a data append, that's a direct connection with your data that triggers alerts, lets you immediately know about it. And that goes beyond just some of the other solutions I mentioned. So that leads us to activity data. So this can be data that you have or data you don't have. So one example is the transactional data that's happening in your institution. It reveals how customers are really using their money. ACHs that help you identify loan payments to other institutions. I remember years ago, the bankers would just look at those things and they'd look at transactions and write down people that were sending checks to Wells Fargo, and that would be how they would do it. Now you can do these things a little bit more, leveraging technology to do some of this stuff. The transaction data has subscriptions that they forgot they had, those increased trips to Home Depot that identify that they're maybe making significant home improvements, so might be a good time to talk to them about a home equity product. And so this is the primary set of data that we're talking about that many of the fintechs are most interested in tapping into. This is what places like MX does with their PFM that attaches to your online banking platform. Places like Segment are using this data for modeling and targeting specific behaviors. So that's transaction data that you have. So what about some of the activity data you don't have? What about that data? The stuff your customers are doing where you could easily miss out on helping them and lose out on important cross-sell opportunities. Again, this is where our solution I mentioned before, customer intelligence, is one of the key components of cracking this cross-sell code. And data like this is quickly taking a front seat at many institutions. We're talking to so many of our clients, and so many of them are implementing this very soon now. Because you can monitor your customer base and identify those cross-sell opportunities for your mortgage team that we talked about earlier that they're missing out on. Monitoring your database, you're alerted to when one of your customers recently lists their home for sale. Okay, so you're saying so they listed their home for sale. What does that mean? Well, there's a good chance they're probably planning on buying a new home. Plus, maybe they just got married, divorced, or having a baby. So in addition to that opportunity of a customer's home going up for sale for your mortgage team, how many other financial situations result from them selling their home that now you're positioned to help them with? You're right there for it because you know what's happening. You're going to retain that customer, you're going to build trust, and you're going to turn them into customers for life. We can also alert you if a customer just got their credit checked at a competitor for a mortgage. So this include any of your customers, ones that currently own a home, ones that are currently renting, but now suddenly they're ready to make their move into a home, and you may have no idea this is happening until they suddenly pull out all their savings for a down payment. Now you don't have those deposits, you didn't get the loan either. But with this alert in place, there's an immediate opportunity for you to have them apply for financing with your bank and then help them with those residual consequences to buying a home. Remember earlier we mentioned credit cards, car loans. So I'll talk a little bit more specifically about those in those alerts that we offer. But right now I'm just going to keep moving and we're going to keep cracking the code here. So before we can move on to the next major key, we need to take what we've learned about our customer base and understand how we're going to apply it. So that leads us to prioritization, because we're still not ready to put this all to work. Now we have all this data, all these segments, all these insights. Now we need to determine which insights are the most important, the ones that align most with our goals. So here's where we start to plan out how we're going to address the high priority leads, those really hot leads, versus other potential leads. Not only does this look at your overall strategy and goals, but also your staffing and the timeliness of the insights. So how soon and what method do you use to reach out to someone who begins using their debit card, using it less versus someone who just had their credit check for a mortgage at one of your competitors? Now you may sit there and say, well, both are important to us. We want to increase our debit card usage. We want to capture that business of the mortgage. But this is where you can decide how to communicate with them in a timely manner and still do it at scale. Because your bankers, your mortgage officers only have so much time in the day. So as you do this planning, see that leveraging technology like our platform for things like task management, journey orchestration, with email communications, crucial importance to manage that outreach for effective cross-selling. So as you prioritize that outreach, you're getting ready for the next step of cracking the code. That's putting it all into action. Now, this is where all that work around data consolidation, segmentation, and planning starts to capture leads for you. And it's going to start first with automation. So this means attaching it to a marketing automation platform, your current CRM, or having a CRM with a built-in automation capability like Total Expert, then setting up the monitoring within your database and the triggers that the automation will recognize, start pre-constructed journeys, specific segments. And I'm not just talking about email drip campaigns, I'm talking about data-driven, behavior-based journeys that use personalization to engage and nurture those relationships for a potential cross-sell solution that adds value. And this journey does so with email, but it can also utilize text messaging, task assignment to human people for outreach. And then based on the customer's engagements with that journey, interacting with emails, applying for a loan, you can prioritize additional or more frequent outreach, either by continuing to use the automation or when necessary, drive an interaction with a human. And at Total Expert, we have the templates for these ready to go. So it's easier for you to just pick them up and make a couple modifications and start pushing leads through these journeys, start seeing results. Now, an important element that I just mentioned was around personalization. And that's what much of this is about. Personalized information, recommendations, relevant messaging. This is all done by having your data consolidated, by proper segmentation, and intelligent journeys. And this isn't just dear first name. This is about understanding who your customers are and where they are in their financial journey. And it carries a lot of weight in consumers' decisions on who they'll do business with. Some of the interesting things about personalization is that nearly 3 out of 4 people from this Boston Consulting Group on the screen said that they moved to a bank because their bank did something to personalize their experience. And not only that, more than 80% said that they purchased additional products or services because of a personalized approach. Personalization matters and can not only improve acquisition and onboarding, but it has a direct correlation with value per household, a cross-sell opportunity, as well as overall customer retention. So less than a year ago, we asked a group of banks and credit unions questions around customer experience and digital transformation to help us really better understand where they were positioned to take their efforts to that next level. When it came to questions around personalization, you can see on the screen how they answered. Now, most of the respondents are not truly personalizing their communication with customers, or it's taking a lot of manual work to do so. And with so much for you and your teams to be doing, partnering with a technology leader purpose-built for the industry like Total Expert can help you take out that manual work. Just think about how much more your teams could get done when your data is all together and automated through a single platform. So now we're to the other component of action, and that's humanization. People still like working with people, and that's how we see the most successful financial institutions of the future behaving. Finding that high-touch personalized messaging that you can automate at scale with the human touch. There are key points in your customer's journey or just key products where a human interaction is more desired. Now, while this can be during an onboarding process, when a new customer is just getting to know the account or how to use it, it's also important when you're doing this with cross-selling. Even though they know you, they may not immediately understand how the solution you're cross-selling to them is solving their financial problem. So when to inject human interaction into a journey will be based on the complexity of the product or the size, the dollar amount of the transaction that can cause stress or anxiety. Could be an uneasiness or unfamiliarity with technology like mobile banking, but a lot of times it's a loan product, a mortgage, a HELOC, because those products can be confusing or just have a huge impact on their finances. So when you're talking about doing this at scale, that's where prioritization becomes critical, but also where personalization and automation can help bridge that gap to help you surface the customers that need the most help. So as you look at where to humanize, this is where having a customer journey map comes in really handy. What points on the map do people feel the most confused, most stressed? Where does a simple, reassuring, personalized email calm them down? and where does it require a call from a person to do the most help. So this is going to be different depending on the product or the solution. So we encourage you to map your journeys that align with your goals, especially on those products that you're looking to cross-sell. In fact, actually just last week, I did see a survey from a place called CDP.com showed 64% of consumers that access to live people would significantly improve the customer experience. So I'm going to just take another moment to expand on one of the previous examples I mentioned to help illustrate how the 3 keys, data, insights, action, can come together in the Total Expert platform to create effective cross-selling. And so for this, we're going to use the alert that came in for a mortgage inquiry. So for our example, our customer intelligence has delivered an insight about one of your customers in your newly consolidated database. So Lydia just had her credit checked at a competitor. She's in the market for a new home. So what happens? Well, there's a number of things that can happen and a number of tools that you can leverage. In the case of the alert that came in for Lydia around getting her credit checked, first of all, her profile in the CRM gets tagged. Easy for someone interacting with Lydia to see this alert. Now, because this alert is part of her profile, we can use our segmentation rules or groups we've built out to better understand how to best help Lydia. We can have Lydia's name and contact info pop up on a priority list on our platform in what we call focused view. We can automatically start Lydia on a multi-touch automated journey. Or we could include Lydia in a customer list for a one-time promotional email campaign targeting prospective homeowners. So again, in this example, we're going to move Lydia into one of our pre-made journeys. Let's follow what happens next. Well, an alert is triggered and sent to your bank in near real time. Like we mentioned, this will be automatically tagged in her profile in our CRM. Now we also automatically onboarded her onto a pre-made journey that begins our outreach. First, it'll send Lydia a personalized email highlighting your mortgage services, lets her know who she can contact with questions, and could even provide a link with the opportunity to submit an application. Next, it adds an additional method of communication, text messaging, to reach out to Lydia, which extends this conversation into another, maybe even more preferred channel. And then it also sends a notification to your mortgage lender and assigns them the task to personally reach out to Lydia. This could even include a call script to ensure brand consistency in the customer outreach. So from there, based on the customer's interaction with this outreach, the journey can progress down different paths on the way to an application and eventually funded loan. Now, in this example, we know Lydia just got her credit checked somewhere else. Do you think you're still going to have a chance to capture that business? Sure. At least 2/3 of home shoppers actually do shop around. So if you find out that she got her credit checked at somewhere else, it's not a lost cause because you might still be able to help her better and give her a better rate, or just in general, just a better experience. So it's important that you don't think it's a lost cause, but definitely opens up more opportunities that you would have had otherwise. Okay, so now you've heard kind of the steps that we've had to crack the code on cross-sell by using those 3 primary keys. It would be great to hear what your thoughts are around 2 of these components. So again, we've done this poll in the past, and I've asked which was their biggest challenge to other banks, and data consolidation or the segmentation, prioritization, automation, humanization, those 5 components of the keys. And 2 of those responses always stood out. They're always the top: data consolidation and automation. So I'm stopping asking about the other ones because it seems like we're getting to something here on the data consolidation and automation thing. So I'm switching up, and I would just like to hear your opinion, for those of you on the call, of which of these 2 standout responses are the biggest challenge that most banks face. Now, it could be your own, but also what you see if you talk to other banks in general, what you're seeing with them. So as they're trying to enhance their cross-sell, what's their biggest challenge? Is it data consolidation or automation? So I think that next poll is up. So if you could start letting us know what you think on that one. And also, with the Q&A coming up, how you answer on here, even if you don't have a question, you just want to let us know why you answered the way you did, or some of the challenges you face when you're trying to deal with these. That'd be great to hear that too. Let's take a look at what we have for results here. When I first looked, it was a dead heat, but we're all still pretty close here. Right now, I'm seeing automation at 56% and data consolidation at 44%. Polls ended there, so but just before it got to that, it was 50-50. So again, these are still standout things. It still seems like two big challenges that banks have in trying to put this all together. So thank you so much for doing that. Appreciate it. So that brings us to that. The next question is, how do you get this all done? How many more systems do you need? So fortunately, Total Expert brings it together in a single system, purpose-built platform for financial institutions that combines that data, that insights, and action to help you enhance your customer experience and boost your cross-sell strategy. Just really quick, why is cross-sell? You attended this. Why is cross-sell important? I think I failed to mention this. But I recently was digging around to see really the difference between the cost of acquisition, the success of acquisition versus cross-selling. And we all know that acquisition is expensive, and that's why looking internally at your current customer base becomes more cost-effective. But I also found a stat that showed that success of acquisition strategies are usually 5 to 20%. Success of cross-sell strategies are 60 to 70%. So again, like this is a way that you can grow your wallet share in a way more cost-effective way, and that's why we're talking about it today. That's why you're interested in it. But that's just a couple other stats that I think are relevant that show the value of it. Acquisition is still important, but that cross-sell, that deepening of relationships is super important. So one of the components that I mentioned earlier, and I use the example that can enhance your ability to crack that cross-sell code, were the customer intelligence alerts that we offer at Total Expert. And I just wanted to hone in on those really quick again. I know I covered them kind of earlier. We have alerts around mortgage, refinancing, and HELOC to help uncover so many more opportunities that you may have just gone by silently to your competition. With these alerts in place, you can be more proactive and confident with what you're trying to cross-sell. We have 4 core alerts. Clients on average who use these type of alerts generally see about 15% of their customer base getting triggers for different things. The mortgage inquiry, listing alerts, about 15% of their client base on an annual basis. So just think if you could be alerted to those situations when a customer is raising their hand saying, I'm ready to do business, and you can be right there ready for them. Again, these data points supported by a purpose-built platform create enhanced journeys, cross-sell, and retain those customers. When it comes to the opportunity in home equity, so there's some new figures that come from Black Knight, the mortgage analytics from Black Knight. The amount of tappable home equity jumped $2.6 trillion last year to a record of $9.9 trillion. It's the largest single year increase and more than doubles the $1.1 trillion growth in 2020. So these gains really put homeowners on really firm ground financially, and on average they have about $185,000 in equity available to them. So HELOC market is potentially a big market going into this year. People may be deciding to, if they didn't already, upgrade their homes during the pandemic. People were doing it, but maybe they're catching up because of there's actually lumber available again, things like that. So the HELOC market could be very big this year. So I'm going to go back to the survey we did last year. We mapped out the respondents to a maturity model, better understand where they were in their digital transformation. It was interesting and not too surprising to find out that many landed a little left of the middle, so in that lower starter to manager level. Why was that? Well, just as we walked through our keys to cracking this cross-sell code, you can easily see the complexity of each part of that solution. And even in that poll where we saw that data consolidation and automation are still things that people struggle with at the bank to really get that stuff motoring along and getting them up to the higher levels of the maturity model. We did find some hopeful information in that study as well. We do see the shift from just interpreting data to leveraging consumer intent signals. So according to our research, 80% of financial institutions surveyed were implementing new technologies, 73% of them were adding new processes and procedures, 51% were working with outside vendors like us to help improve their customer experience. So you're not alone in all this, but it's still a great time to step ahead of your competition and improve your cross-sell efforts by cracking the code with us. I'm going to leave this model up for just a minute and let you kind of self-assess where you fall in the model just based on the descriptors, if you don't mind. And then as you do that, I just like to let you know that we're super interested in helping you and your teams with your cross-sell efforts. But beyond that, your onboarding efforts, your retention efforts. So if you have any questions after this webinar, I want you to feel free to reach out to me. My email will be provided here in a couple slides. More than happy to talk about cracking the code, how to overcome any hurdles you face, or if you'd like to know more about our experience platform, or if you'd just like to talk to me about my experience in the past at a bank and some of the things that we did to try to move ahead to the next level of the maturity model. So yeah, so my information will come up here in just a minute, and like I said, feel free to reach out to me. All right, so now that you had a minute to look at that, one more poll, if you don't mind. After seeing that maturity model, where do you think your institution lands up? So I think that's up right now, and if you want to answer that, that'd be great. Leave it up here for a minute. I can say, based on previous ones when we asked this recently, now we did this study last year and you kind of saw we do have some stats around that, but more recently I was still finding a lot of people in that starter and manager level that when asked. So again, it falls back to those things of it's hard to move ahead. It's hard to find the right technology to move yourself up that. So yep, thank you for those that are responding. It's ended now. So we had 50% in the manager level in that number 2 spot, 25 in the starter, and 25 in the achiever. So you know, that's people are trying to do things new, trying to do some stuff better. It's all just putting together can be a challenge. So thank you so much for those that respond on that. We appreciate it. Okay, so with that, let's take any questions that you may have. I'm just going to pop up, like I said, my contact info here, just as we start the Q&A. But I just want to say I sincerely appreciate the time you've given me. And with that, I think Naomi's going to jump back on and help me out with some Q&A.
Yes, thank you so much, JJ. And just to remind everyone that you can ask questions on the right-hand side of your screen. There's a Q&A box. Feel free to put your question in there, and I will relay it to JJ. Just to get us started, I had a question about, since at the start of this, there was like 50% said they didn't think their banks were doing a very good job. I think the word they used was bad for when it comes to cross-sell. So where's the easiest place to sort of get started, especially for that group?
Yeah, I think
when cross-sell.
Well, I think the one of the biggest tricks is to say, you know, what are the goals? What are the goals of the organization? What part of cross-selling is going to help align with making those goals? Now, you always still want to be able to look at your customers and say, what do they need? You don't want to just throw the whole kitchen sink at them and say, you know, here's everything we have. But there are definitely things that products or services that are really important to you as a bank and moving ahead. So you look at that and say, okay, who in our database is going to be served best by this? And that's where you start, is like with a single thing. And one of the simplest things, even though it's not necessarily cross-sell, it's borderlines it, is like the onboarding process when you're trying to activate debit cards and get online banking. So some banks may consider that cross-sell because it's even though it's a core component of the account, people have to do another step with it. But it's about looking at those processes, looking at those things and saying, okay, how do we best represent this product we're trying to offer that's important to our bottom line? How are we gonna identify the people that will best be served by it, and then how are we going to communicate with them? I mean, it comes right down to that data, insights, and actions. But I guess the best way to start is to start simply. Start with one thing and say, how do we do this the best? Because once you kind of figure out the process for whatever that is, maybe it's auto loans that you're trying to cross-sell. Once you figure out the process for that and how you're going to identify the people, how you're going to communicate with them, how you're going to take action on that, then it's just kind of a, lack of a better term, rinse and repeat. Okay, we got that process down. Now let's apply it to home equity. Let's apply it to investments or whatever that is. Apply it to mortgages.
Yeah. What's the right sort of balance between having a personalized approach and having a sort of automation? Because I know I've talked to some banks before that after the PPP program, they just really started making personal phone calls into the people that they gave PPP to and said, hey,
Sure.
how else can we help you as a bank? What are your needs?
Yep.
And trying to build that relationship that way.
That's a great question, because it is in regards to the PPP loans. Why was it so much important for the human? Again, like we said in the presentation, it's the complexity. It's the complexity of it. It's the financial impact that it has on someone. So if you look at that one specifically, it's like that seems like a very hands-on. I need to call them physically. So they kind of got probably used to that type of hands-on approach. So calling up to say how else I could help you is probably the right thing to do. But that's hard to do at scale. Again, with those PPP loans, it's still, when you're talking about businesses, it's a smaller group. If you're talking about a retail product, that's harder to do at scale. You can't just start dialing for dollars and dialing people up and saying, how can I help you more? It's not scalable. And that's really where the automation can kind of step in and help in those cases. Now you're saying, well, how much automation is too much? Again, that's where having a customer journey map to really understand how you're trying to help them and at what points they really need a person to interact. If you're cross-selling an auto loan, does it really need me to call you up and say, hey, do you need an auto loan? How are you doing with the auto loan? Now, at some part of the process, I might need you to do that. But initially, you just maybe need to do some automation to educate that consumer on what you have available, why buying a new car is better than buying an old car, or vice versa, or like those reasons that you do things. So educating them on why, that's where automation can really kind of fill in that gap. Because then if you see that people are interested based on interactions or signals that they give via those emails, then you can reach a point where you're saying, okay, I think it's time to reach out to them because they've shown enough interest. And now they're at a point where making a decision to buy a $30,000 vehicle is a huge impact on their finances. So let's help them out, and I'll reach out with them, through a human process. Yeah. So it's not a perfect rule of 80-20 or anything like that. It is based on the product. So sorry to interrupt you.
Yeah, that makes perfect sense. And then I was curious about the customer intelligence alerts you were talking about.
Yep.
What sort of results do you see there among your customers who are using them?
Yep. So alerts like this, I'd mentioned about 15% alerts triggered. And then what our customers that have been using alerts like this have seen is that they get 15% of the alerts. They generally get about, it's a little over 6% in applications. And then the close rate is kind of dependent on, it kind of varies. Some are just better at close rate. So industry average around 60%. So, depending on your customer base that you're monitoring, if it's 60,000, in the end, it's some simple math. I got a calculator that I usually do the math on. But it ends up being a very positive ROI in terms of the cost and benefit out of it. So it generally, the ROI is between, I think it's usually around 15% ROI too. If you're just talking about the alerts, our platform has got, the customer alerts is a module that's added onto it. But for that module, it's about 15 times ROI.
Mm-hmm. Awesome.
Yeah.
Well, I just want to remind everyone that you're going to receive a recorded version of this webinar in 24 hours. So we're also going to post this on bankdirector.com. So thanks so much to JJ and Total Expert for co-hosting today's webinar.
Thanks, Naomi.
Have a great rest of your day.